All right, hello everyone. I'm joined here by Seb Bunney. He's a Bitcoiner and he's written a book about Bitcoin, and we're going to talk about Bitcoin. So I'm just going to throw it over to you quickly here, Seb. Um, what was it about Bitcoin that interested you at first?
First off, I really appreciate you having me on here. You know what? I think when it comes to Bitcoin, there is no marketing department. There is no kind of like central kind of planner that decides its trajectory. So in the end, its success is on these little podcasts. It's these community events. It's basically the people that kind of take the baton and run with it. And so I really appreciate you having me on because I think it's all of these little podcasts and people that are willing to kind of like take the lead in their community that help Bitcoin thrive and make Bitcoin what it is. So thanks a lot. As for the question, I would say, you know what, initially, and I think this is most people's kind of like journey down the rabbit hole, is number go up technology does draw you in. I think I had realized, and I've explained this on a bunch of other podcasts, but kind of very briefly, I was living in Whistler in the small ski resort or large ski resort town of Whistler. And I was teaching mountain biking and I was earning like $15.75 an hour. And I was just like, how am I ever going to be able to raise a family, to be able to buy a house, to be able to get ahead on such an income? Like, there's just no way. And so I started to look at the financial markets and real estate. And I started digging into like, how do I generate a passive income so I can actually pursue the life I want to be able to pursue? And as I went down that rabbit hole, you really start to realize that the world is not what it seems. I believed that we lived in a free market. And so during times of economic stress, well, companies that have been fiscally irresponsible would kind of like wither away, and those that have been responsible would thrive. But instead, you would have intervention, money sent towards these kind of like fiscally irresponsible companies. They would thrive, and then it would incentivize more and more risk taking amongst all these businesses. And so these positions that I was taking in the financial markets to try and generate passive income, they would always go against me. And I was like, what is happening? I thought we lived in a free market. And it wasn't until I started digging deeper into the mechanics of the monetary system that I was like, oh my God, we live in nothing, like nothing even close to a free market. So that led me down the gold rabbit hole. And then you realize we have no idea how much gold there is in the world. None of these central banks have been audited. And then that ultimately led me down the Bitcoin rabbit hole. And yeah, I'm here now. And I believe that a lot of the issues that we face stem from a broken monetary system. When our money is broken, when we can't preserve our purchasing power, it leads to a whole bunch of societal issues, whether it's environmental, whether it's relational, how we show up in the world, whether it's political, whether it's from a business perspective.
Wow, that's so interesting, and there's a lot of different threads we can touch on there. One thing you mentioned is that there's seems to be all this risk in this financial system, and it eventually like there's an unwinding of risk, and we saw that maybe say 2008, right? There was an unwinding of all of this leverage, all of this risk in these financial markets that are supposed to work for you. And then there's the bailouts that happen, and so there's unfairness in that, and it doesn't end up being a free market. I mean, recently, we saw and I think it was only in August, the yen carry trade. That's a de-risking event. Potentially, with bond yields going up, we saw another potential possible de-risking event as well, or de-levering, I should maybe say. Um, how does this all play in? How does this system continue on like this, or does it continue on? And how does Bitcoin play into that?
It's a tough one. I think that we live in a very interventionistic system. And there's a famous saying in the financial markets, which is the market can stay irrational for longer than you can stay solvent. And I think that this is where we like to think that people are rational beings and that prices reflect value, and they really do not. And so when we go into these events, take the pandemic, for instance, if you had lost in Canada, where we live, if you had lost 10% of your income, you were entitled to the CERB, the Canadian Emergency Response Benefit. Well, the Canadian Emergency Response Benefit was $2,000 a month, $24,000 a year to individuals. Well, when you take a look at Canada's tax receipts, you realize that one third of all Canadians earn under $25,000 a year. So you've basically just given an option to one third of Canadians. Do you want to go and work for your money, or do you just want to get handed it for free? And so what do? They drop out of the kind of the workforce, and then small business, mom and pop shops, they can't find any workers, whether you're in like coffee stores, bike shops, restaurants, they're struggling. And it's because you basically just given this incentive for people to stop working. And so I think that intervention on a high level perspective, yeah, you're trying to do good. You're trying to support people that are struggling. But the reality is that these are complex adaptive systems. Our economy is a complex adaptive system. And when you intervene, you create all of these unintended consequences. And so I think a lot of Bitcoiners are very pro what is called like Austrian economics. This kind of like stepping back and allowing the market to decide what is valuable. And so capital flows to where value is being created. If a company is not creating value, if I try and create a product, I come out and I'm just going to be like, you know what, I'm going to create Seb's widget. Now, if I go try and push that widget and people aren't interested in it, no capital is going to flow towards me. I'm going to have to rethink what it is that I'm doing and try to create value in another way to be able to survive. And that's how we end up with innovation and efficiency gains and productivity in society, because we're constantly pushed and pressured to rethink and create value in society. But the problem is when we have an interventionistic system, and this is kind of roundabout answer to your question, when we have an interventionistic system, we end up basically bailing out people that are being fiscally irresponsible. We end up supporting people that aren't actually offering value to society. And we end up basically decaying productive capital. Capital that otherwise would go towards value ends up going towards sustaining these poor behaviors, these unproductive behaviors, these fiscally irresponsible behaviors. And so overall, I think how Bitcoin kind of like completely shifts the narrative is that it kind of forces us back into a free market where all of a sudden, because you can't print money, you can't artificially direct capital. It's a permissionless, trustless system. You don't need permission to spend your money, and you don't need to rely on third parties. So there's no intervention from third parties. All of a sudden, capital starts to flow towards value where value is being created. And we've never had anything like this before. If you take a look at a high level of a nation, what you want to see is, hey, if this industry is thriving, it's because people value it in society. Money is flowing towards that industry. If this industry is not thriving, well, it's showing that society doesn't value that industry. But we can't see any of that today because unfortunately we have government propping up whole industries, whole sectors, directing capital towards these areas of the economy that really are not offering value. And in the free market, we wouldn't direct capital to those areas of the economy.
Yeah, this is incredibly interesting because just as you said there, it's almost like, you know, we're supposed to take in all these data points if we're investors, if we're working in the market, but with this intervention that we've seen, those data, that all that data is going to be skewed because of that. So it's not actually reflecting the truth of what the market wants. Now, I do want to play a little bit of the other side here and say and try to give the case for intervention. Um, you know, is this a smooth transition to being a Bitcoin centered free market reality here, or the argument really for intervention is, again, we can go back, I guess, 2008, banks needing bailouts if these banks fail, or we could even go back to Silicon Valley Bank, which is not even that long ago. If those banks don't receive bailouts, then the customers lose out. Maybe there's a knock-on effect, a domino effect, just hurting other parts of the market. People losing their jobs, people losing, again, we could look at CERB in Canada. If those people didn't get those checks, those individuals would suffer. I mean, how does it look to go towards this? Is that will there be a lot of pain for people that are propped up by government intervention?
This is such a tough question because I think that the world isn't black or white. It's not intervention or no intervention, because in reality, everything sits on a scale. And I think that if we were to move towards a Bitcoin standard, the way that I see things happening is the government can still intervene. But if we are operating on a Bitcoin standard, well, the government first has to balance its budget. And it first has to be able to basically, whatever its operating expenditure, it has to cover through tax receipts, because it cannot cover that through the printing of money. And so if it is doing that, if it has got excess left over, then it can start to form a treasury, and it can intervene. If it builds a treasury and says, hey, this is for emergency funds, we're going to use these emergency funds for when there's incredibly tough times in the economy, then yes, it can intervene. But what I think it does is, because it's had to save and because it's limited in its ability to intervene, it's going to be a lot more conscious about how it intervenes. And I think that that's the first stage towards kind of setting some form of fiscal responsibility. Because the reality is, you look at the pandemic and it's just like, oh my God, the economy is just about to collapse. The stock market is at all-time highs, starts to drop, and then all of a sudden they interject with trillions of dollars. So like the housing market, I had a small little condo And in December of 2019, I was like, the economy feels so unstable. I had no idea what was going. I didn't know the pandemic was going to happen, but I just felt like when you're looking at debt metrics, when you're looking at like kind of growth trajectories, and just the instability that was taking place, I was like, I don't know if I want to hold this property anymore. So I ended up selling it in December 2019, and then in February or so, when the market started to kind of like shake with COVID, I was like, you know what? I think I just timed the market. I just want to see house prices drop, and then I can buy it back at half the price. And instead, house prices tripled. And now that apartment is worth 3 times what it is that I sold it for in December 2019. Yet we supposedly went through like a recession. And I'm just like, that's insane. So the current market, I don't think reflects the true structural integrity of the economy, because we're printing over things with capital and we're not actually incentivizing long-term thinking. And I think that the challenge we're facing right now, and maybe let's put ourselves in the seat of the US. The US, you see Trump putting these tariffs on. And I'm not left or right. I kind of tend to believe the system is broken. I think we need to fix the monetary system and separate money from state. But let's just put ourselves in the seat of what is happening in the US. So Trump is kind of putting these tariffs in place. And these tariffs in place are because he wants to try and onshore manufacturing, because he recognizes that at the moment they're highly dependent on the global supply chains. And on top of that, he's got this other issue, which is they've got $33 trillion in debt, and $9 trillion of it needs to be rolled over in the next year. So they've got to figure out how to roll over $9 trillion, and they don't want interest rates super high. So they're putting these tariffs in place, and I don't want to get too much into the complexities of things, but they're putting these tariffs in place, and they're trying to basically create some form of stability. But they also recognize that our financial assets are so overinflated that we kind of got to bring them back down to earth to be able to create some form of structural stability. But then the problem is, the moment asset prices start to come down, you get the whole baby boomer population. You get everyone that's invested in assets screaming at them, just like, I voted for you. I wanted you to keep asset prices high. I wanted you to support my future. And it's just like, this isn't sustainable. How do we end up in an economy where we're just artificially pumping asset prices, creating massive wealth inequality, and then you go to try and create stability, and you're basically shouted out of the room? And so we're stuck between this rock and a hard place. And I think, unfortunately, because we have borrowed beyond our means for so long, in order to be able to get to a place of stability, we've got to live within our means for a period of time, live below our means for a period of time, just because we've got to be able to pay back this debt at which we've borrowed, whether that's on an individual level or on a government corporate level.
Okay. So I want to go back to the beginning there. You talked about how a government can start to go towards more of a fiscal responsibility and live within their tax receipts. So I want to get a little bit more into what inflation actually is within that, because there's this idea of there's three ways that government can kind of raise revenues or be able to spend, which is raise taxes, increase debt, or the third one, inflation. And so that's where I see Bitcoin really coming in and being able to. There's no way to create more Bitcoin, right? There's a real cost of production to either mine Bitcoin or buy Bitcoin. You cannot create more of it. So if we get rid of inflation and the government only has those two other options, I guess my question here is more about the option that they currently have, which is inflation. What does that actually do when those people got those $2,000 checks, when banks get bailouts, when companies get bailouts, when there's stimulus in the economy from new money? Who does that affect? What does that do?
That's a really good question. And I think that, like, if you were to just put it down very, very simply, I would say that historically we have understood that the printing of money results in the inflation of prices. And the definition of inflation in the dictionary I think it was around 1970s, was inflation is a rise in prices as a result of monetary expansion. And then what happened is, post 1970, the US government changed the definition to inflation is a rise in prices. And what they did is they removed the cause of the rise in prices, because all of a sudden the government can stand up and say, hey, there's this thing, inflation. We're going to do our absolute best to fight inflation. We're going to fight it with Inflation Reduction Act and print $5 trillion. And it's just like, that's obscene. That's the cause of inflation. And so by being able to remove the cause, they're able to basically put this enemy front and center and say, we're going to fight against this enemy. but people have no idea what's actually causing inflation, when all inflation is a monetary phenomenon. You can have short-term inflation as a result of supply and demand. If all of a sudden demand increases and supply stays still, then prices rise. But in the long run, it finds equilibrium. And so I think that inflation that we face today is primarily a monetary phenomenon as a result of money printing. And you just need to look at like the Canadian dollar, the US dollar, the British pound, the New Zealand dollar over the last, say, 50 years. And we've like annualized between like 7 to 10% expansion of the monetary supply. But that's a huge amount of capital entering the market. And so if you were to put yourself, let's say an analogy, we were to find ourselves on an island, and this island had 10 people, 10 coconuts, and $10. And each of those people have $1. Well, in theory, money represents the value in that society. Well, there's 10 coconuts. So each coconut on average would cost $1. Well, if you just double the monetary supply, you've not doubled the services or the products in society. You still have the same 10 coconuts. So instead of those coconuts being $1, they're now worth $2. But if during that period wages has only increased by 20% instead of 100%, you may only have $1.20, but all of a sudden coconuts are now $2. So you're just like, this is insane. I can't afford to live. And so the challenge we face in today's society is that wages, unfortunately, lag inflation. So our wages are not going up at the rate at which inflation is going up. And so life is becoming harder and harder and harder. Rental, like the cost of living, the cost of groceries, is slowly becoming a larger portion of our paycheck, to the point where people are just struggling. And it's no reason why that in the US it's something like 75% of people live paycheck to paycheck, and in Canada it's like 64%. Like, those are just mind-blowing numbers of people that are just living paycheck to paycheck, just trying to survive because life is challenging.
Yeah. Okay. Wow. So who benefits from currency increasing in supply, and who sees the negative effects of that?
And then that's like straight to the point. When you look at a government, or sorry, when you look at a system from a holistic level, you realize that when you devalue the currency, it is the debtors, the people that are borrowing, that benefit. Because if you owe $100, but all of a sudden that $100 is worth significantly less, so it's easier for you to earn that $100, then all of a sudden that debt becomes less of a burden. And so who is the biggest debtor in any nation? Well, it's the government. The government is the biggest debtor. So they have an incentive to devalue the currency because it makes their debt burden less. The problem is, who is like at kind of a disadvantage? And that is savers. If you're saving, your whole goal is you want to try and preserve your purchasing power so you can spend it at a future point in time to better your life, better your family, better your trajectory. But if you're devaluing the currency through the printing of money, and life is getting harder and harder and harder, all of a sudden that's those savings that you have kind of worked hard for, the purchasing power goes half as far. And so I know a good friend of mine, she inherited £100,000, which is about 170,000 Canadian dollars. This was about 10 years ago. And at the time, we're living in Whistler. And she was like, I kind of want to buy a property. I don't know if, like, what is the housing market going to do? Is the housing market going to collapse? And she was so hesitant, she didn't put it in anything. Well, today she still has that £100,000. But during that same period, house prices have tripled. So what you're basically saying is that, like, that £100,000 that you have, that $170,000, is now only effectively worth £30,000. You've basically lost 70% of your purchasing power as a result of monetary expansion. And so any of these individuals that simply just save in the currency, their ability to thrive is just being degraded year after year after year.
So it's almost like there's this compound effect or combination effect of the currency getting devalued. And that also, I think, a lot of people understand that, whether it's implicit or not. So then they seek out something that's going to outperform just holding the currency, which then inflates these assets as well. You've talked about it raises their price nominally. So you talked about, property going up 3 times in value. That is because of demand as well for a store of value, in my opinion. Is that kind of what you're saying there?
Absolutely. And I think that there's a big difference, and this is something that I feel really sad that society has lost. There's a big difference between saving and investing. The idea behind saving is that, hey, I want to go to work. I want to dedicate my time to this thing that I'm passionate about, this thing that allows me to support my family and kind of thrive. And then any excess, I want to be able to store in the currency so I can use it at a future date. Well, all of a sudden, if I can no longer save in the currency because the purchasing power is just like degrading as we're experiencing, what does it do? Well, it pushes people into assets. And assets are very different from saving because assets involve taking risk. The idea is that you're taking risk in the hope for a greater return than if you'd simply just held your purchasing power in the currency. Well, the problem today is because we're not incentivized to save in the currency at all because of just the degradation of purchasing power, we're pushed into risk assets. So all of a sudden, the average individual, they have to go spend 40 hours a week doing their day job as a nurse or a plumber or a doctor or a man and bike instructor, whatever that may be. Then they got to go home and spend another 15 hours, 20 hours trying to figure out how the financial markets work and figure out how do I invest? Like, what is investing? How do I preserve my purchasing power? So everyone's being pushed into finance because of the fact that money is degrading. And then on top of that, because the money doesn't act as a store of value, to the point that you were making, people are storing value in other things. And so house prices are skyrocketing. Farmland is skyrocketing because people are using it not for its utility purpose. They're not using farmland to grow vegetables and to support a community. They're not using houses to put a roof over a head to support a family. Instead, they're using it to preserve purchasing power. And so then you come to these areas where farmland is being bought up left, right, and center, but it's not being used to grow any crops. It's just being used to store value. Where I lived in Whistler, 61% of houses are empty, yet we have a housing crisis. And you're just like, why are they empty? And it's because wealthy individuals are like, well, it's the best place to store my purchasing power, and I don't want to deal with tenants. So when you have a broken financial system, when money no longer stores value, people are still going to store value in something. So they flee to all of these other assets, which then pumps up their price. And I would genuinely argue that if we had a monetary system that allowed us to simply store value so people could save again, I would argue that house prices would be 10% of what they are today. Asset prices would predominantly be 10% of what they are today, because the whole financial sector today in our current economy exists primarily to protect purchasing power as a result of a broken monetary system.
Incredibly interesting. So basically, what you're saying is a store of value is a huge problem that the world has, and they seek out a solution of that problem with things like real estate, ownership percentages of companies, and future cash flows. And I think you're really spot on with that concept of where somebody has to split now their time, energy, intelligence from what they could do professionally, and they could increase their skills in that level or their ability in that level, and they now have to focus on something like the financial markets. It just doesn't seem to make sense why we have to split our attention, how we have to become gamblers, speculators, investors, financial experts just to maintain our purchasing power, which is what a lot of the kind of average investors do, is preserve their purchasing power. They don't necessarily increase it that much. I do want to get a little bit more into Bitcoin now. We've barely even touched on Bitcoin here. So if Bitcoin is becoming the store of value, its purchasing power nominally has increased so much over the past years. Do you think that's largely because people are seeing it as a store of value? People are using it as a store of value, or what do you ascribe its increase in value over the since its inception? Why do you think it's going up in value so much over time?
I tend to think that there are two reasons. The first reason is just adoption. Whenever you have anything that kind of comes out and it's new, it's exciting, it does something better than its predecessor, whether that's gold, whether that's US dollar, Canadian dollar, fiat currency in general, all of a sudden, as people start to adopt that, you've got obviously a certain amount of supply, and then you've got demand. That demand far outstrips supply. So the only way to balance that is for price to increase. And so I would say the large portion of Bitcoin's price increase over the last 16 years since it came out was as a result of adoption. But then on top of that, and this is what we're transitioning to now, is that we're starting to see Bitcoin being used more and more and more as a store of value for this long-term asset, and not just a speculative asset because it's kind of rocketing at 100% a year annualized. And what is interesting is if we were to move towards Bitcoin as a kind of a Bitcoin standard where Bitcoin was used as a base layer of money globally, what's really fascinating is that prices would fall over time. People would be incentivized to move towards Bitcoin as a savings vehicle. Well, why would that happen? Well, if you read the book Price of Tomorrow by Jeff Booth, and for those that have not read it, it's like, I would say it's one of the like foundational texts for a Bitcoiner. what Jeff Booth talks about is our world is inherently deflationary. What does that mean? It means that since the dawn of time, humans have always tried to get more for less. Whether we're cavemen trying to create tools to be more efficient in how we show up, more efficient to get more meat off the bone, more efficient to go and hunt animals, we're creating tools and to be able to extract resources more efficiently, be more productive, be more efficient. Take like Netflix versus Netflix versus Blockbuster. With Blockbuster, I used to have to drive down to Blockbuster, expending time and energy, gas. Then I used to have to spend 30 minutes in Blockbuster trying to figure out which movie I was going to rent, drive all the way back home again, watch the movie, drive all the way back in, drop off the movie, drive all the way back home again. Like all of that time and energy. And now, for almost the same cost as one movie or DVD rental, you can basically get Netflix. At the touch of a button, you've got millions of movies. So we are always, through technology, trying to get more for less and be more efficient. So in theory, prices should be falling given that we're more productive, we're more efficient. And the problem is we don't realize those falling prices because we print money at a greater rate than technology is driving down prices. And so if we had a society where we had a fixed supply of money, like Bitcoin, you've got 21 million. If we were all operating on that 21 million, as society became more productive, as society became more efficient, as we had more goods and services, well, all of a sudden prices would fall. And so going back to the example of the coconut on the island, if we had 10 Bitcoin and there was 10 coconuts, well, what would happen is if we became more efficient, under that example, each coconut was worth 1 Bitcoin. Well, if all of a sudden we became way more efficient at harvesting coconuts, so now we had 20 coconuts and still 10 Bitcoin, well, coconuts are now 50 cents. So prices of coconuts start to fall. And so the world in which we live in, if we actually allow our monetary system to align with our natural deflationary state of things, life gets easier. It doesn't get harder. And so I would say that we're going to get prices rising, Bitcoin's price rising and prices falling as a result of one, adoption, but then two, once that adoption trend, we start to see mass adoption, or we start to see Bitcoin used globally, so we're not seeing a huge amount of adoption, we also still continue to see price rise as a result of the fact that humans are always striving to get more for less and technology is driving down prices.
Right. Yeah. Okay. So there's a lot of maybe mainstream financial experts, I'll say, that talk about why deflation in an economy is actually a bad thing. You're talking about the sort of the deflation of prices because we're increasing technology, we're increasing our ability to produce things. Why would somebody think that cheaper prices for things would be bad? What would be the problem that these people have with a system like that?
So I would say that falling prices in today's world is a bad thing. We have so much debt that if you're a company and all of a sudden you have less cash flow coming in because your prices are falling, well, all of a sudden you can't meet your debt obligations to the same extent. And so you risk going insolvent. And so in the world where we're built upon this huge debt load, we become insolvent very quickly and we face kind of mass defaults across the nation. And so under today's economy, wholeheartedly agree, a deflationary world doesn't align, but that doesn't mean we continue down the same trajectory of printing more money. It's kind of like saying, look, I'm a heroin addict and I don't want to face the symptoms of withdrawal, so I'm just going to keep using heroin. And that's what the world in which we live in today. Our world is inherently deflationary. Our world, prices should fall because people are always striving to get more for less. We balance that by printing more money, propping up all of these companies, creating this artificial inflation. But in order to be able to balance that continuing moving forward, we got to continue to take on more and more and more debt, which increases the structural instability of the economy. And so I would say that if we were to move over to a Bitcoin standard, we have to go through, as I was mentioning at the start, a period of pain where we have to live within our means because we've borrowed beyond our means for so long. But I think that in the long term, it's going to be far more structurally sound. It's going to realign the incentives because people aren't incentivized to take on debt, given that if you take on debt and you cannot service your debt payments, you go under. And so we have a far less of a debt burden in society. We're far more fiscally responsible, and we're experiencing a world where prices are falling, so life gets easier. And to me, I think that is profound. We've just got to think long term, not short term, which is what we're doing right now.
You mentioned the adoption cycle we're in, how there's an increase in adoption. Is there a large I mean, this might sound like a very simple question to answer, but I'm still curious to get your answer on it. Is there a large benefit to adopting something that has a fixed supply, a fixed issuance like Bitcoin? If you're an individual, if you're a corporation, if you're a country, is there a benefit to adopting that earlier than other people and moving over to a system like that? Maybe taking your medicine, or going through withdrawals a little bit earlier than other people or other companies or nations.
I would say absolutely, and I think that it is where, as time goes by, we're going to obviously see greater adoption. But as we see greater adoption, the return profile of Bitcoin starts to flatten. And so at a certain point, once we reach saturation, once the majority of people are using Bitcoin, then yes, we're just going to see this kind of slow trend upwards in price as a result of prices falling because people are becoming more productive. But we're no longer seeing that influx of capital through that adoption phase. And so at the moment, the earlier you adopt Bitcoin, the more runway you have for that adoption potential to benefit your returns, which then makes life easier for you. And so I think that what's interesting is, like, if you were to look at house prices in Canada in Canadian dollars, in I think it was 2014, it was like 415,000 Canadian dollars was the average house price across all of Canada. Today, that house is now 760,000 Canadian dollars. So we've seen almost a doubling in houses across all of Canada. There's a lot of cheaper houses in the Northwest Territories and whatnot. We're not looking at the Sea to Sky where I live, which houses are like freaking $2 million. But we've seen across Canada $2 million, a doubling of houses, almost a doubling of houses over the last 15 years or so. What's interesting is when you take Bitcoin, Bitcoin has gone from the average house in Canada in 2014 was 1,058 Bitcoin. Well, the average house in Canada today is 8 Bitcoin. So you start to see prices in relation to Bitcoin are falling. And so if you're a company and you have a treasury, or you're an individual and you're saving in Bitcoin, given that Bitcoin is appreciating at a greater rate than everything else, you could also say that everything is falling in relation to Bitcoin. So whether it's your food costs, whether it is housing costs, whether it is whatever it is that you want to shove, if you want to buy a new mountain bike, prices fall in relation to your savings vehicle, given that your savings vehicle is appreciating greater than everything else. And that, I find, all of a sudden, people can be like, oh, you're focused on money. And it's like, no, what happens is when you have more capacity financially, you have more time to look inwards. If you have more time to look inwards, you have more time to think about, like, how do I want to show up? What is it that I actually value? What are like my morals in life? Do I want to have a family? And so you start thinking long term. You start thinking from a more grounded perspective. Whereas today, because we're constantly stressed financially, instead of being thinking from this kind of like long term approach, we're thinking from the short term impulsive approach, which is, how do I get money on the table? How do I survive? And I just need to make money. I'm not thinking about what it is that actually motivates me and drives me. And so that's where I just think society today is very broken, because our monetary system is pushing us to think short term as opposed to thinking about long term prosperity and security.
Right. Are you able to expand on that a little bit? I'm curious to see what you think the future looks like under a Bitcoin standard, and how that reshapes some of societal values, individual values, maybe the way people conduct business. Is this something that like you see changing, just like the fundamental nature of how people behave?
Absolutely. I think in my book, The Hidden Cost of Money, I try and tie Bitcoin to psychology, and not necessarily just Bitcoin, just money to psychology in general, and how money impacts how we show up. And there's kind of like 3 areas that I kind of like to touch on. The first one, which I kind of briefly touched on, is Bitcoin is, will be familiar with the term. It's called time preference. And so time preference, you can think of it as a low time preference is someone who is thinking about the future. They're thinking about long-term stability and security. Whereas someone with a high time preference is being impulsive and meeting their immediate needs. They're not thinking about the future. They're just here right in the now. Now, what is interesting is when money starts breaking down, when our cost of living starts to increase, where life gets harder, we're pressured into being impulsive because we're thinking about, as I mentioned, trying to put food on the table, trying to survive. The flip side is that with Bitcoin, as purchasing power increases, life gets easier. As we have more capacity, we can start to think long term. So it shifts our focus from the immediate to the long term, which means actually in the greater span of things, we can start to contribute more. We have more ability to support others, to support ourselves, to support our family. So we end up with a more cohesive society. I think that is profound. The next one is like meaninglessness. Now, today, because of just the rising cost of living, rising house prices, it becomes really hard to plan for the future. So if I wanted to, I don't know, save up for a house here in Canada, 10 years ago, I could have mapped out, okay, I'm earning this amount and I think a house is going to cost this much. Well, then 5 years into that, all of a sudden my time horizon has had to extend 15 years because the house prices have doubled. So it becomes really hard to plan for the future when we can't even predict what the prices of things are going to be. On the flip side, with something like Bitcoin, if prices are falling, our ability to plan becomes easier and easier and easier as time goes by, as opposed to harder and harder and harder. And from a psychological perspective, there's a lot of studies on something called your locus of control. And what this is how you show up in the world and whether you believe you have an external locus of control, which is, I don't believe I'm in control of my trajectory. I don't believe I'm in control of what it is that I can do, my future. I'm kind of like, I'm just stuck at the whim of the world around me. And the other side of it is, I believe I'm in control of my trajectory. I'm in control of what it is that I want to do, and I can make changes to be able to create the future that I want to live in. Well, from a psychological perspective, people that don't believe they can control their future and they believe they're at the whim of the world around them, they have lower health outcomes, they have lower life expectancy, they have much lower confidence, much higher allergies, much higher rates of depression, anxiety, suicide. The flip side is also true for someone that believes they have control over their future. Well, Bitcoin, when our purchasing power is increasing, we have more capacity. It gives us way more ability to kind of plan for the future and achieve what it is that we're trying to achieve. And so for me, instead of having meaninglessness, we have meaning. We can much easier to find meaning in society. And then the final one I'll just quickly touch on is compassion and altruism. And I think that in today's society, when we are fearful, our aperture of awareness narrows. We become so hyperfixated on survival. And when we're trying to survive, we don't have that same capacity to give back, to be compassionate, to support those around us. We're focused on ourselves and our immediate family. And so I think that in a society where purchasing power is basically falling, where cost of living is becoming more expensive, where putting food on the table is just exponentially harder, people are focused on survival and they don't have that same capacity to give back. On Bitcoin, I truly believe it's the opposite. And you just need to spend time in the community to realize just how generous the Bitcoin community is and their desire to just like support those around them and to build community and to put on these events. And it's just profound. And on top of that, what you're starting to see is Bitcoin is starting to have kids again. Bitcoin is thinking about family. Where I live in the sea to sky, like Vancouver up to Whistler, no one is having kids. People are just so financially strapped. And in Canada in general, we're seeing the birth rate fall off a cliff. I think we're now below replacement rate. And so this is a result of people just being financially stressed. And it's so much harder to like raise kids, think about a family, think about the future. And so what I've just done there is tied like money to psychology. Money, how it preserves our purchasing power or not, shapes our ability as an individual to show up.
Yeah, I can personally attest to the fact that getting into Bitcoin has changed the way that I personally think about myself, my future, my life, the world. It's rewired a lot of stuff for me, and that's part of why I wanted to share the Bitcoin content online. Was the idea that it could really change individuals. It's not just about number go up, make a bunch of money, sell Bitcoin at some point to live off of or something like that. It's much more fundamental than that, personally. And I guess my question to you here is, a lot of when people think about Bitcoin, they might have some perceived notion about it, but they instantly do connect it to money, and making money or something around that. And a lot of people are just not really that interested in money. They might complain about grocery prices or housing prices, and they work 40 plus hours a week to create money or to acquire money, but they still don't really care about money. So I'm just wondering, how do you think people should start looking at Bitcoin? How do you think we get more people interested into caring about what money is and how it drastically affects their lives in what they save in?
I think that's such a great question. And I think that the ironic thing about Bitcoin and what I love most about Bitcoin is that even though it is digital money, it gets us to stop thinking about money. And I think that because money is so broken, we're constantly having to think about it because we're trying to simply survive. We have to think about where our next paycheck is going to come from, how much we're earning to be able to put food on the table, how much we're earning to be able to put a roof over my head. And so in today's society, money does have like a negative association to it because everyone is stressed about it. Everyone is thinking about it. Whereas the funny thing about Bitcoin is that as life gets easier, you don't have to think about Bitcoin as much. As you have more capacity, you don't have to think about money as much. That's profound. And so for me, I think I look at Bitcoin as a spiritual tool. I think today we're becoming so disconnected from ourselves, from our intuition, from our communities, from our culture, because money is breaking down and life is becoming harder and we're just simply focused on survival. Whereas Bitcoin flips that on its head. As we have more capacity, we have more time to focus on culture. We have more time to focus on community. We have more time to focus on showing up authentically and connecting with the self and grounding and figuring out who we are and how we want to show up. And so for me, the most important aspect of Bitcoin is that it's a spiritual tool that allows us to stop thinking about money. That to me is like the most profound thing about Bitcoin above everything else, because we have a society that's just constantly fixated on money.
Right. Yeah. I think that's powerful. Yeah, it's still it's tricky to get people to connect it to something beyond just money and to look into it deeper. But I think it's inevitable, as it's almost, to me, like I started caring a lot more about Bitcoin when I actually did have money and I needed to try to protect that money. And I started looking into investing and all of this. So people need to have their moment to figure out what Bitcoin is. And that's kind of where I want to go next here, Seb. I'm just going to present this tweet of yours. This here is a really great graphic you have for a 21-day tweet a day journey that you did. This is all fundamentals of Bitcoin. Well, not all, but the first 5 days fundamentals. These are all different things that you deemed worthy of learning about when it comes to Bitcoin. Where do you think people should start once they've gotten interested in Bitcoin? What do you think are some of the key focuses that people should have when looking into Bitcoin?
You know what? This is a really tough question, because I think that everyone's journey is unique. And I think that in an ideal world, we want to be able to say, hey, go and read this book and go and read this book and go and read this book. And then you're going to be set and everything's going to be hunky dory. And the reality is that people have their own interests, they have their own worldview. And so when it comes to education, I think we've really got to meet people where they're at. And so if you're talking to a single mum, she's probably more interested in, well, how does Bitcoin allow me to show up more for my kids? If you're talking to an economist, he's probably more interested in, well, how does Bitcoin relate to our current system? And like, what is it about QE that results in, I don't know, financial wealth inequality or something like that? And so I think that the reality is, I don't think there's like a one size fits all solution to Bitcoin education. I think that as individuals, we have to seek out the information that resonates with us. And so when I created this kind of like 21 day or 20 day journey, what I really tried to do was approach Bitcoin from a few different lenses. So that it kind of gives people a more holistic approach of Bitcoin, and they can take and leave whatever it is that resonates with them. And what's interesting as well is I wrote a book, I mentioned it very briefly, called The Hidden Cost of Money. And The Hidden Cost of Money I released about a year ago and have just been kind of blown away by the response. But the way I structured that book was in the same vein. I needed to give a little bit of monetary history so that people can at least understand where we've come from. But then I have a whole chapter on psychology. And then there's a chapter on the parent-child bond. And then there's a chapter on environment. Then there's a chapter on business, and then there's a chapter on like government and politics. And so depending on where you're coming at it from, there's going to be information for you. And I think that that's where, when we're putting ourselves in an educational role, a teaching role, and we're showing up in front of our community and supporting others in their journey, I think the first thing we need to be doing is being curious about the people in front of us. Who is it that is in front of us, and what is it that they find interesting about Bitcoin? Or if they don't know what they find interesting about Bitcoin because they're new, what is it that they're interested in? And now let's try and tie Bitcoin back to what it is that they're interested in. And that's how I find we have the most successful experiences supporting people along in their journey. And then the final thing I'll note is, I think when it comes to education, we can sometimes dive into the solution before people understand the problem. And I think that if we start talking to them and they're just like, I don't understand this Bitcoin thing, it's a Ponzi scheme, we don't start talking about Bitcoin. If you start talking about Bitcoin, they don't understand the problem which Bitcoin is trying to solve. And so it's all about talking about the problem and making sure they understand the problem prior to introducing Bitcoin, or else the solution will never make sense.
Yeah, really great point. I do want to get a little bit more into maybe some of the technical stuff here with you. Um, what do you think about the importance of the decentralization within Bitcoin? How, the hash rate is decentralized, the holders are decentralized, the consensus mechanism with nodes also adds decentralization. Why is that important to have within a money system? The idea of decentralization.
So when you step back, if you look at the world objectively, you realize that people are naturally self interested. We're always going to do what it is that benefits us. And sometimes we can be doing things for the betterment of the community, but in reality, we're still doing it because we want to feel good about ourselves. We want to show up. We do things to support our kids for the kid. In reality, there's also an evolutionary tendency to support our genes and push our kind of genetic makeup into the world. And so I think that the reality is that we live in a world where people are self-interested. And so if you let a small community of individuals govern a system, unfortunately, we're going to trend in a direction which usually does not service the needs of the general populace, the general users. And you just need to look at any of these large systems, whether it's our current monetary system, whether it's looking at like the healthcare system and these regulatory bodies, like it is not serving the needs of these people and of the general populace. And so I think that decentralization is like one of the most foundational pillars of Bitcoin, given that what we need to be able to do is build a system built upon consensus, so that it is the community that govern its trajectory and not some small cohort of individuals that are able to alter Bitcoin for their own benefit. And this is where Bitcoin, we need to ensure that we have decentralization, as you mentioned, on so many different levels, whether it's the nodes who are ensuring that people are following the rules, the miners and the wallets that are broadcasting the transactions are following the rules. We then need to ensure that the miners are decentralized. We not have too much power in the hands of any one miner. We then need to ensure that we're not relying on even just a singular exchange or a singular entity to be able to access Bitcoin, because otherwise, how do we get the on ramps and off ramps can be easily shut off? And so I think that in the end, it's really important to think about decentralization from a holistic standpoint, all of these other areas of Bitcoin. And I would say that it's one of the most important aspects of Bitcoin. We have always had money controlled by some form of central authority, and that has led to kind of demise of that currency.
What do you think about? I mean, this is something that I get comments out all the time, but the acquisition of Bitcoin by entities like BlackRock or MSTR. Do you think that's a sort of a centralization risk of the actual of them actually holding Bitcoin, too much Bitcoin themselves?
I would say it's a really challenging one, because you can be conflicted in that if you go down the route of like free market, I believe in freedom of speech. I believe in like bodily autonomy. I believe that people can direct capital to where they see fit. And so I don't want to intervene and say certain groups aren't allowed to go and purchase Bitcoin, because all of a sudden I'm going against the values at which I ascribe to myself. And so I think that anybody should be able to purchase Bitcoin. The challenge is, which I do see, is that if we start to see major global adoption and a lot of individuals are purchasing Bitcoin through these either financial institutions like BlackRock and these vehicles like Bitcoin ETFs, if a large portion of Bitcoin is held through these traditional financial institutions, then in theory, we could have some form of fork. And this isn't my area of expertise, and so kind of don't quote me on this, but we could have some form of fork where, because they control a large portion, they can fork the rule set to their benefit and dump the existing Bitcoin, given that there's a chain split. You've got Bitcoin, the original, which is what we're on right now, and this new Bitcoin that benefits them. By dumping those Bitcoin, collapse the price of that Bitcoin and allow this Bitcoin to seem like the dominant chain that the community has supported. And under that situation, if the majority of individuals in society don't know any better because they've not done their research, they don't understand the key tenets of Bitcoin being decentralization, trustlessness, permissionlessness, then I think that we could find ourselves in a world where we have a centralized version of Bitcoin. What I'm hoping is in the short term, we start to see that movement between centralization where people are adopting Bitcoin through ETFs. But in doing so, and that price appreciation, it pushes them to learn more about Bitcoin. They start to value Bitcoin for the properties it holds, and then they withdraw to self-custody. And so although in the short term we see a swing towards centralization, in the long term it moves back towards decentralization. And that's what I'm hoping. I think that there's a Bitcoin mechanic that says something along the lines of like, everything is good for Bitcoin. Even these things that are bad in the short term are good for Bitcoin in the long term. And so I always appreciate that viewpoint. And I think I'm optimistic that will be the case.
Yeah, I think it would be. I mean, they have such a good business model with the ETFs, right? Just assets under management, small fee. They make a huge amount of money from that. I think it would be pretty risky for them to go all in and try to fork and try to get all the hash rate on their side. I mean that could. I mean, it hasn't worked in the past for people that have tried to fork Bitcoin. As far as market cap of the forks compared to Bitcoin. So I don't know. It's an interesting topic though, and yeah, one to keep an eye on, I suppose. Where do you think Bitcoin is going in the next 10 years? What kind of challenges do we have for widespread adoption? Um, Maybe not price predictions or anything, but where do you kind of see Bitcoin going in the future?
I appreciate the not price predictions. I think everyone gets too focused on the price, and in the end, it's just like looking at the bigger picture of what Bitcoin is doing. I think is profound and how it impacts us as individuals on a social level. As for where I think it's going to go, it's it's such a tough one because I think the world right now feels very unstable, and political leaders, are acting very impulsively. And so I think that it can go. There's so many different avenues at which you can kind of like trend towards. What I think will be interesting to see is how we start to see government adoption over the next like 3 to 5 years. Now, when it comes to government adoption, I'm indifferent. I think that some people are just like, well, you're Bitcoin maxis. Aren't you like against government oversight? Aren't you against like intervention? It's like, absolutely. But I also think that if we want to see the world on a Bitcoin standard, it's inevitable that governments are also going to get involved. And so it's just like, at what point do they get involved? And how do we try and minimize their ability to kind of command change in the network? And going back to kind of decentralization. And so I think that I think we're going to see is the reason why we have, like in Canada, we've got tax-free savings account and RRSPs, and in the US, you've got IRAs, and you've got these various like tax-efficient retirement products. What they do is they incentivize people to invest in these products, but in doing so, if you're investing in Bitcoin in these products, you don't really have control over your Bitcoin. And so I'm hoping that what we start to see is these retirement products in the US. In your IRA, you can invest in self-custodial Bitcoin, which is unbelievable. You can do it in Australia. You cannot do it in Canada. And so I'm hoping that we can start to see more IRA products, RSP products that allow self-custody, so we don't see that consolidation of Bitcoin in these traditional financial entities. On top of that, what I'm hoping to see is self-custody just become easier and easier and easier. I think one of the biggest barriers for entry right now is the fact that we live in a world where we're used to effortless mobile banking, where we're used to being able to send funds in Canada through e-transfer or like simple ways to be able to send people funds. And it's the user experience is simplistic, it's easy, and we want to see that increasingly take place in the world of Bitcoin. And we are trending there. If you look at the difference between moving Bitcoin, saving in Bitcoin, self-custodying Bitcoin 5 years ago, 10 years ago to now, it's already far easier. But I think we're still a long ways off being able to have mass adoption. Like for people that are living in apartments, people that are living with housemates, having to deal with a single key or a single point of failure in self-custody, or having to find locations for multiple keys for multi-signature self-custody. It's just such a hassle. And so I'm curious to see how the innovators and the developers think up new ideas and ways to be able to store Bitcoin in a self-custodial manner without the stresses of single points of failure and self-custodial risk, making mistakes, setting it up. I'd say those are kind of like the two big things, is just having a look at how we see policy changes, how we see regulation take place, especially in kind of the taxation front and the IRAs and RSPs, and then also from a ease of use aspect of self-custody.
What do you see on the merchant adoption, sort of the peer-to-peer spending side, the medium of exchange of Bitcoin? Do you see that moving in a trajectory upwards, or?
I would say that the one thing needs to take place for that to happen, which is we would need to be able to put Bitcoin on level playing field with the Canadian dollar or the US dollar or a lot of these other fiat currencies. And to do so, I believe you need to remove capital gains tax, because at the moment it becomes such a headache. If I, as an individual, want to go and spend some of my Bitcoin, if I've got a positive gain on that Bitcoin, well, now all of a sudden I've got to report a capital gain. And so if you're doing micropayments, if you're buying a coffee, every time you make that payment, you've now got to record that for tax purposes, which is just like it's overwhelming, and I think that it's too much on the average individual. And so I think that for the meantime, Bitcoin is primarily a store of value, and I don't think that detracts from Bitcoin adoption. I think a lot of people say, well, if people aren't spending Bitcoin, then how are we going to see Bitcoin adoption? And I don't think that's necessarily true. I think that if Bitcoin can prove over the long term that it's a savings vehicle, just like gold has proven over the thousands of years, gold isn't used as a medium of exchange today, but we're still seeing people store value in gold. And so I think that in the short term, storing value in Bitcoin is totally viable. We don't necessarily need to move over to a medium of exchange. However, I think that if we are to see some of these major nation states step back and say, you know what, we're going to remove capital gains tax on Bitcoin, all of a sudden it puts Bitcoin on a level playing field with the local fiat currency. And I think we're going to see far greater adoption far quicker. What's interesting is there's something called like Gresham's law, which is with legal tender laws, when a local currency is a legal tender, you have to use that. The merchant has to accept that. All of a sudden, bad money pushes out good because people spend the bad money and they hoard the good money. But when you have something like a free market where currencies are on an even playing field, all of a sudden you have Thier's law, which is the opposite, which is good money pushes out bad. Because if merchants are like, I don't want to accept this currency, I want to accept the money that actually stores value, they start requesting that money, and you start to see the way people transact changes. And so we've got a bit of a barrier in terms of legal tender laws before that takes place. But I think the first step is removing capital gains tax.
I definitely agree with you, and maybe there's a reason for the government. I mean, the government likes to have control over a currency because it allows them to do certain things. So I think potentially there's a big incentive for them not to remove capital gains tax on something like Bitcoin. So we'll see kind of if we can eventually get that to go through, because that's a big barrier in my opinion as well. Every time I talk about merchant adoption to people, it's yeah, but what about the capital gains tax? So yeah, hopefully we see some changes in that eventually, in my opinion.
Well, I think the other one thing I'll quickly note is that it's in the best interest of the government to remove something like capital gains tax, because you're going to see a whole influx of people move to these nations that end up supporting their populace. And so, yes, you may lose a marginal amount of tax revenue. We're talking about whatever Bitcoin appreciates, the capital gains tax from Bitcoiners, Bitcoin appreciating for just that small subset of the population, and not even just that small subset, but only the ones that actually even sell their Bitcoin. And so the actual grand scheme of things, if you look at overall tax revenue and then Bitcoin is a small subset of that, it's tiny, it's minuscule. Whereas I think if you start to put in favorable regulation or favorable on-ramps into something like Bitcoin and remove the hurdles of saving in Bitcoin, I think you're going to start to see capital flowing towards your nation state. And we're already starting to see it in countries like El Salvador. El Salvador, since it adopted Bitcoin in 2021, has been booming, and there's been a ton of entrepreneurs and capital flow towards El Salvador as a result of favorable regulation. And in the end, I would say that in the free market, we believe that competition allows value to be created, and competition basically weeds out countries or weeds out entities which aren't offering value. Well, if you're a nation state and you're offering value and people start flooding into your nation, you're going to improve productivity, you're going to improve efficiency, you're going to bring capital into the country. And that's what these countries are struggling with right now. Productivity is falling through the floor. And I would say that Bitcoin has the potential to fix a lot of that.
I agree with you there. I do think that there would be positives for the nation as well, but I do also to counter that. If we agree with the second law there, where good money pushes out bad, that would mean there would be less holders of that nation's currency. So, like El Salvador, kind of worked because they don't have their own currency. So Canada, if people recognized Bitcoin in the same level as Canadian dollars, they'd be incentivized not to hold Canadian dollars or Canadian denominated debt as well, and then that would a lot of that goes towards funding Canada, right? And it would devalue their currency against the globe and cause issues there as well. That's just maybe the counter to that.
I wholeheartedly agree. Yeah.
All right. So, Seb, we're on an hour here. Do you have any final thoughts? Anything that maybe you want to talk about that we haven't talked about Bitcoin? And then beyond that as well, can you direct the viewers to where to find you and your book as well?
For sure. No, and again, Forrest, I really appreciate you having me on, and I appreciate your curiosity, and I appreciate kind of the depth of the questions because it's easy to talk, and I look forward to hopefully meeting one day in person. But people can find me just at Seb Bunney. Bunny is Bunney on Twitter, and then I have a website sebbunny.com where I have a blog. I don't post on it too often. And you can also just find my two books, Beers for Bitcoin, which is more about how Bitcoin works. It's very similar to, it's kind of like an expanded version of the 21 days, understanding Bitcoin, the 21-day tweet a day journey. It's kind of an expanded version of that. And then there's also the hidden cost of money. And those are on Amazon. There's a bunch of other Bitcoin related bookstores as well that it's on. But one of the biggest things, like I never want price to be a barrier to learning. And so if anyone is listening to this and they're like, oh man, I want to learn more about these things, feel free to reach out. And if you can't afford the book, I'll give you the ebook for free because I just want people to be able to learn, and I think that's really important. But again, I really appreciate you having me on, and I look forward to meeting in person.
Yeah. Thanks so much. I really enjoyed this conversation.